Is it bullish or bearish what's happening in China right now? Because they're going to have to ease to fight the slowdown, or just this uncertainty over how long it lasts?
I would say it's generally speaking, it's bullish because the government is determined to push the market up. As you know, some of the high government officials have made positive comments about the market, and that's usually a big signal for other investors in China to come in. But more importantly, they're pushing interest rates down in order to support the economy. So I would say we're in a relatively bullish situation, but there's so many other factors that are weighing on the market, such as the crackdown on the large cap stocks, the big tech stocks, and also the whole situation about fears with Russia, collaboration of Chinese and Russian arms controls people. So I think those are other things that are weighing on the market that's going to be a problem.
Yeah, I mean, we saw 3% declines in Chinese stocks overnight and Hong Kong as well. Mark, what about what we just heard from Kyle Bass, who thinks there's a geopolitical risk for investors if they own Chinese stocks or China exposure? Because if China invades Taiwan in the next 18 months, as he says, and now he's granted a longtime China hawk, that could be dangerous given what we've just seen play out in Russia.
I think Kyle's got a very good point. From a long-term point of view, if China continues to move towards a more authoritarian state, it's very difficult to justify putting a lot of money into the market. But that may not happen. The situation that we see now may change. But very important is Taiwan, of course. I don't see China invading Taiwan within the next year or so. But of course, anything can happen. But I just don't see that happening because you've got Taiwan being very, very important to the U.S., to Japan, to Korea. And so it's very, very difficult to justify that happening.
Should you be switching out of the U.S. and into emerging markets, Mark, given the underperformance so far in emerging markets this year? Do you see anything changing there?
I wouldn't switch out of U.S. stocks that have a global footprint, particularly in emerging markets, because there are a lot of U.S. stocks that could be considered emerging market stocks because of the big sales they have in places like India, China, South Africa, South America, and so forth. But I would say the most important areas which are interesting to us, at least, are Brazil, India, and Taiwan. Those are the three areas that have the best bargains, as far as we're concerned, and have the best prospects for growth.
Brazil, India, and Taiwan. India, even though it's an energy importer and it gets hurt by these high oil prices?
We must remember the largest part of the Indian energy market is coal, unfortunately, polluting coal, but it's about 70–80% of their power. So they're not that dependent upon imported oil. It's important, but not that important.
Mark Mobius, always good to check in with you and get your thoughts. Thank you for joining me.